Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour, and I think the way to put today's activity so far is to say that, well, we are not up another 0.5%, 1%. We're only up 10 points because, I mean, we already had a fantastic and flying start yesterday to the week, which came on top of a couple of weeks of pretty strong gains. So today, I mean, things are a bit easy. There is a holiday, trading holiday coming up tomorrow as well. Maybe that could be the reason. But even without the holiday, I would say that it's pretty understandable the market's going a bit slow and not at the same frenetic pace that we've seen the market go, both in large caps and mid caps as well. Ekta, morning.
Hi Prashant, yes absolutely. So it's just about consolidating at around 11,500 and over 550 currently for the Nifty, so up around just 12 odd points, and we have the Bank Nifty which is underperforming a tad bit, so down around 50 odd points currently for the Bank Nifty. But separately, lot of stocks in focus. Just want to point out Tech M, which is up around 2 odd percent, and besides that, from the broader markets, watch out for a couple of stocks such as HCC, which is up 4%, and Sequence Scientific, which is up another 7%. The reason I'm pointing out these two stocks is because they're seeing follow-on buying from yesterday's trading session. So both these stocks, just in the span of 2 trading sessions at current reckoning, have gained anywhere between 20% to 22% at this point in time. But we'll get talking about more stocks through the show. Let's get in some technical calls. We have Mitesh Thakkar joining in for that. Mitesh, over to you for the Nifty. What are you strategizing today, as well as in terms of specific stocks?
Yeah, so I think, there's been some I would say that greediness coming in. I think Prashant was not very happy with the fact that we are just flat and we are not 0.5% up. But I think that might happen for the next few days. The idea is that we have had a good rally. The indices are overbought on the short-term charts. And having said that, I think, they might take a day or two of consolidation. So 11,480 was the earlier swing high. That becomes your pivot and support. As long as that is not being broken, stay positive. And if you want to buy a fresh, then try to buy it around 11,510, 520 zone and keep the stop below 11,480. I think 11,600, 630 should be your target on the Nifty. For the Bank Nifty, I'm waiting for the index to break about 28,350 to take trading positions.
Mitesh, actually, I'm breathing a lot easier. I mean, the rally is not this breathless,
Exactly, yes.
one-way move. That makes at least me uncomfortable. But Mitesh, what would you trade in terms of stocks?
Yeah. So coming to stock specific picks, I think Cummins has given a good breakout. Yesterday we saw the price movement was positive. Today I think there's follow up as well as volume action. That's a buy with a stop at 710 for targets of 780. And Tata Motors clearly has been a stock which no one would have missed in the last few days. Appears to have made a trading bottom and now a counter trend rally has begun. So that's a buy with a stop at 266. Look for targets close to about 290.
Okay, we have a couple of Twitter queries now, Mitesh, so let's get going on that. Pankaj writes to us on Twitter. He's bought 600 shares of HDFC at 1980. 1 week ago, wants to know the short-term view on the stock.
See, I think in the short term, the stock appears to be consolidating. I think, HDFC in fact has gone through a good rally and now is just settling down. I would suggest typically when you're buying a stock like HDFC, look for a slightly longer term horizon. But I think in the short term, the stock might do a range of roughly about 1840, 1850 in the downside to about 2000. So you might want to play the range, try to take your profits the next time stock is closer to about 2000 or add more if the stock is closer to about 1850.
All right. Thanks very much, Mitesh. Appreciate you joining in, and we speak again with you soon. We have Gaurav Bissa of LKP joining in as well, as always, for some trades on the futures and options side, single stock futures, etc. Gaurav, morning. What would your sense be and what would your trades be?
Good morning. Nifty can see somewhat of consolidation. We have seen a strong breakout coming in Nifty. A lot of writing has been seen in the put options. Any dip towards 11,500 would become a lucrative buy for Nifty for target of 1160, 11620 with a stop loss of 11,450. As far as stock specific picks are concerned, first recommendation would be buy on Wipro. IT space has been buzzing quite strong. It's been trading in a range. It's come out of the trading range, and 5% OI addition has been seen. Some amount of long position has seen getting built in the name. With a stop loss of 286, it's moved up quite a little bit. So one can have a trailing stop loss of 286 and buy for target price of 300. Second recommendation would be KPD, another IT name. It's been trading in a very strong uptrend. For last 1 year, the trend line support is seen at 285, 286. This is also the level where 100 DM is placed. If you look at today's data, more than 10% OI addition has been seen getting built in the name. So strong long positions are seen getting built. With a stop loss of 287, one can buy KPIT for target price of 300.
Okay, all right, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is a couple of more F&O strategies for you. But let's get talking to a company. We have Ajay Agarwal, who is the president and CFO of CN, the IT company, joining in to talk about business now. Mr. Agarwal, hi, thanks very much for taking the time out. Well, you did see some amount of a tailwind from the currency last quarter as well in Q1 FY19. But that didn't assuage much of concern when it came to your margins, which were down around over close to 200 basis points on a sequential basis. What exactly is your guidance probably in terms of margins with the rupee now at 70? And how exactly are parameters such as utilization, etc., looking for you?
Hi, really appreciate your having me on the channel. As you said, that currency definitely is a very nice tailwind for us when it comes to the margin and profitability for the company. If you see last quarter, we did have one of the quarters where we had the wage impact, and we had the margin in line with the expectations, which got impacted because of two reasons. Apart from the wage hike, we had some one-off expenses which are not likely to be there in the rest of the years. And also we had a muted growth. And when we look at the remaining year, we are absolutely on track in line with the guidance that we had given of double-digit growth in services business, our DLM business to be growing at 30-35%. So I think that headwind in terms of volume is behind us as far as Q2 and rest of the year is concerned. Rupee, definitely a tailwind which will be there. I'm not sure if we can take 70 into account, but whatever be the rate, I think you do get at current levels some benefit of 100 to 150 bips on the margin if currency were to be at these levels. But overall, I think our guidance has been that, we are investing about 1% of our revenue into the investments in new business accelerator. Despite that, we said we will keep the margin to be flat year on year. So as of now, I think we are holding to that guidance. But if rupee continues to be, much beyond 68, to that extent, it will be a further upside into the margin.
Okay.
Mr. Agarwal, you're saying that if rupee stays where it is for the rest of the quarter, it's about 100, 150 basis points more on the margin. That's what you said, right? Just confirming that. Everything else being same.
I'm saying that, yes, I am saying that if you look at the rupee, which was 64 last year, and if rupee were to be somewhere between 68 and a half to 70 for this year, you get a tailwind of 100 to 150 basis points in financial year 19 compared to financial year 18.
Okay. For the two big businesses for you, which is aerospace and defense and communications, right? I mean, business-wise, business vertical-wise, which is, a large part of your overall business. What is momentum looking like, especially in the US, Mr. Agarwal, if you can take us through, because we see all this data out of the US in terms of record high optimism, business surveys being conducted. We have tweets from Mr. President Trump saying it's never been this good. So it must, you partner with these companies, these large global companies, and work with them on R&D, etc. So you surely must be seeing a big rub-off. How large is that rub-off and how sustainable is it?
No, definitely, I would say that, things are looking very good in terms of North America. If you look at our customers and our interactions, their spending budgets, the way we are looking at growth, including in aerospace and communication, I think extremely good growth is what we are looking at in North America. Also, I would say that apart from what is happening at customer end, we also have a differentiator as signed, because if you look at this new regulation which has come into place about H-1B, visas and related regulation, we were the only company in the IT sector, to the best of my knowledge, which has more than 85% of foreign nationals from Indian perspective, or say locals in North America. That's why the regulation did not impact us. So on one side, we have extremely good traction from the customers in North America. On another side, I think we are very well placed compared to the other industry in terms of not getting impacted by the regulation change. So North America is doing extremely well, and you will see it throughout the year. As far as aerospace and communication is concerned, I would say aerospace had a little bit of sluggishness last year, but happy to inform you that this year we will do much better than the last year. And we have not only from North America, Europe also there is a good traction. And apart from our largest customers, we are seeing very good growth from other customers as well. In communication, we have been having extremely good traction for last couple of years. This year will be another growth here in communication. The growth will not be as high as last year, but still it will be a double-digit growth above the company average growth in case of communication also.
Okay. Your guidance for FY19, which you had provided in Q1 FY19, was over 20% odd growth?
No, I think what we had said was double-digit growth in services. If you look at our business, we have 90% of our business which is in services. So we said double-digit growth there. And we have about 10% of business which is in design-led manufacturing. There we had said 30-35% growth. In total, leading to double-digit growth. Also same leading to, more importantly, much higher growth in operating profit.
Okay.
Again in the double digits.
So when would you probably have visibility, say in the fiscal, in order to probably assess where you are in terms of your guidance? For example, how exactly are your Q2 parameters in terms of client addition, order book looking vis-a-vis Q1?
So I would say that, we don't have to wait for Q2 or rest of the year. I am very confident that we will be on track for the guidance of this year. And you're right, I think that's also based on Q2 so we have stopped giving guidance quarter by quarter, but definitely the pure mathematics says if you have to achieve the guidance for the full year, Q2 has to be a strong quarter, and definitely it will be a strong quarter. So I can assure you already the indications on how the backlog is, how the order intake is, how the wins are, how the Q2 will span out. I think we are on track for the achieving our guidance for the year.
Mr. Agarwal, it's a pleasure. Thanks very much. Appreciate you joining in and speaking with us. Cyient, in the crazy run-up world of IT stocks, Cyient would seem like a bit of an underperformer because it is not up 50 or 60% this year. It is up only 25%. But for the last 1 year, I mean, if you go back just the full year, then it is up over 50% or so, which is nothing to scoff at. Despite the bigger run-ups we've seen in other IT stocks as well.
Well, nothing much to incrementally talk about. From the last time we checked, it's just about flattened out for the Nifty. So it's given up all of those gains that we were seeing initially as well, but just about consolidating after the strong run that we've seen on the index itself at 11,552 currently. But we have Manisha joining in to tell us what she is looking at within the commodity and the currency space. So Manisha, over to you.
Thank you so much for that, Ekta. It is really the metal space that catches your attention. Third straight day of gains here, and we have seen the rebar steel prices in Shanghai hold 7-year highs. If you look at the prices of hot rolled coil, that one has hit a record highs today. The rebar especially is up 5% in last 3 trading sessions. That cannot be said about the steel ingredients, because when you look at the iron ore prices or even coking coal prices for that matter, they haven't gained so much. But when you look at the non-ferrous space, we have seen good amount of gains there as well. The copper prices are back above $6,000 per ton. The zinc prices are trading at a 1-week high. So is the case with aluminum as well. For the ferrous metals, it really is about persistent worries about a possible tightness of supplies. China has been talking about curbing output in view of pollution concerns. And while it might start from winters more stringently, but it already has begun for some of these provinces. And that, of course, has been supportive for the metal prices there. Not just the industrial metals. When you look at the gold prices, those have bounced back as well. We did see a low of 1160, but from thereabout, we are holding around those 1195 kind of levels. The weakness in US dollar also has been a strengthening factor for many of these commodities there. But to get an analysis and to understand on where we could be moving on from here, let's get in Jörg Kiener from Swiss Asia Capital. Jörg, hi, thank you so much for joining us. First of all, the industrial metals, really, what is your sense on that? The US-China talks in this week in Washington also is something that the markets would keep a keen eye on. We'll try and get back to your Keener yet again, but remember, of all the fundamentals that we just spoke about, it also has to do with the US and China talks in Washington. While, of course, the US president has said that he doesn't really see a timeline for, resolving that dispute. China, of course, has been saying that they are looking by November to resolve it. So there clearly is a divergence of conversation or statements that we have seen come in from both the countries. But this, of course, has been a very strong sentiment boost. If you look at the CFTC data, though, we have seen markets also turn around. Until now, we had been holding net shorts for many of these metals, but there is some unwinding of those net shorts, and even some buying is what we've seen come back in case of the metal prices there. And not just gold, if you look at the silver prices, there is buying that we have seen come back for that one as too. Last week, we were trading at a one-year lows for the precious metal prices, and we have seen some buying. So almost 2 to 3% off those kind of lows that we saw in the previous week. So almost everything in metals, whether it's ferrous, non-ferrous, precious metals, all of that has seen some strength come back. Jörg, if we have you back, what are you reading ahead of the US-China talk this week?
Yeah, I think the talks are ongoing. They're going to be very soft. There's not going to be much conclusion probably until closer to the midterm election. Okay. So it's not really a major change in what's going to happen on perception between the trade frictions we have.
Jörg, we have seen the US dollar decline in the last 24 hours, and this is after the US president's remarks on the interest rates, on the US-China meeting, etc. But the weakness in US dollar definitely has given that boost to many of those commodities. How are you reading the relation between the two?
I think if you actually look at the forecast we had about 2 months ago, which came out of most Wall Street banks, was that we would have 2 more interest rate increases this year and another 3 next year. So if you look at your Fed rate right now, and you look at your 2-year rate, your 10-year rate, and your 30-year rate, you actually see that between the 2 and the 10-year rate is 20 basis points, another 20 basis points to the 30 years. And versus the Fed rate, it's about 25 basis points. So 2 Fed rates would actually get you back to the 2-year to 10-year rate. And that means your yield curve will be incredibly flat. And if you looked at the bond market, the longer end, it's been rallying like mad, basically telling you that the economy is probably not that strong, that actually the strong dollar is being rather hurtful to the economy. And now you're going to get basically the structure where people will question how many more interest rates do we really get, the increases? 5 times 25 basis points, 125? I don't think so.
Well, yes, that's a point to wonder really. But how are you looking at China on the other side? Because, of course, US has its own problems. China, the economic data has been on the weaker side. This whole trade war, tit for tat with US, and then, of course, the production curbs because of the environment. The whole, the industrial sector really seems to be taking a hit because of that.
Yeah, but I think a lot of it is sentiment. So if you look at, let's look at the trade, and let's believe we basically charge 25% on $500 billion in trade. There will be $125 billion cost to China on what, the $17 trillion economy? That's not even 1%. That's 0.6% of cost of the economy. So we're making a hell of a lot of noise about this trade and taxes, and we all know taxes will be cost. But it's not going to change the way the economy in China is really happening. What's much more important is sentiment and people who are rethinking how the trade will look like, and on the back of that, we are postponing actual capital investments. And in return, what we see is governments are coming in and stepping up and supporting the economy to flattening it out. So the economy will grow. Maybe the sectors which are major beneficiaries will change a little bit, but I don't think we are here at the abyss of Chinese economy.
So, Jörg, what is your sense on where are the industrial metals moving from here? Because we have seen a lot of decline on the lower side. Steel prices, of course, have been holding firm. How do you read the divergence between the ferrous and the non-ferrous metals?
Actually, if you start looking at oil has actually been quite flat. Okay, it's a resource like everything else, not being affected the same way than what you've seen affecting almost all the base metals. But if you look at copper, you actually start seeing that the big chunk of the copper trade has been a derivative trade. I haven't heard anybody who can't ship good quality copper to China. So what we actually have is actually a lot of financial engineering price mechanism in the system. And then you have the smaller metals like zinc, which basically they are so small that just fell off the cliff. But if you look at iron ore, good quality iron ore gets shipped. You look at coal, it gets shipped. So what we have is a sentiment trade, and it's a sentiment trade which has been really negative because everybody's been long dollar, long Nasdaq, short commodities, short emerging markets. And what we have now probably that some people will have to unwind some of these positions and come back to neutral, and that will actually create a floor underneath the prices.
Jörg, also, how are you looking at the gold prices now? Because while we have seen the lower lows, we've seen a breach of 1200, and that's how it's trading right now. There are a lot of voices rather, who are advocating a buy in precious metals. What is your sense? Where would we end this year?
I think it's like on the copper side, the leverage on the short side by speculators is the highest ever. So that tells me we're probably closer to the bottom. Maybe we do another $50 on the way down in the washout trade, but most of the washout trade has been done. If you look at the miners, for 80% of the miners, cost is around $1,200. So within $100 of that trade, you're at the bottom of the gold trade, which basically tells me 1100 is probably 1120 will be the bottom. A worst case, so it actually doesn't really look that bad. The washout in the miners has been so bad that you're almost back to 2008 levels. So that tells you as well that the sentiment trade has really been bad, and I think from that point of view, normally bad news is good news to buy.